good, everybody? Happy Wednesday. Welcome to the Closing Beat. This is a quick show that we do to kind of go over the stock market, the good, the bad, and the ugly. We'll cover it all, hopefully. If you're watching this live and you have any questions, feel free to post them in the comment section. Of course, I cannot comment directly on whether you should buy or sell something. SEC rules, sorry about that. We are Jazz Wealth. We're financial advisors that manage long-term retirement accounts or long-term investment accounts. Like I said, we are SEC registered fiduciary financial advisors. We manage our own portfolios. And hey, we're going to talk about the stock markets today. So let's get started. Today, I'll keep saying it, but today was a win, right? And so the markets didn't do a whole lot. If you take IBM out of the equation, the Dow did nothing, the S&P did nothing, the Nasdaq did nothing. The Dow was down by 92 today, all because of IBM, or 78% of because IBM. So if you take that out of the equation, you could see you take a good 70-75 points out of the loss from the Dow. IBM accounted for about 70 points of the loss today. So if you take that out of the equation, you have basically a flat Dow, a flat S&P, lost a fraction of a percent, and a Nasdaq fraction of a percent. Down here at the bottom, this is the interesting part. Look at the red dashed line. I mention this every day. That's the closing price of the previous trading session. In this case, it was yesterday. The markets couldn't get anything done today. It was a lot of chopping around. The S&P actually looks a bit muted relative to the Nasdaq and especially the Dow. The Dow swung all over the place, which I maintain is a win in the short term. If you're a short-term trader, then today was a win because you didn't see the market sell off. By the way, the Dow Show every day this week at 1 o'clock, we're talking about the active short-term traders, helping you out with some things there. Tomorrow, we're going to cover statistics, by the way. So what do you look at as far as the markets go today? I want to just cover a couple things real quick. Maybe it'll let me switch to the charts over here. So you got the Dow wiggled around inside of a range. If you're one of our customers, you've seen our candlesticks class. If you're not, let me know. I'll get you in. This told you today that the markets wiggled around back and forth, and you need more information to make any decision. So no trader changed their minds today. Think of it that way. If you started the day off bearish and you thought the markets were going to fall, then you're not going to change your assumption. Nothing happened today to change your assumption. If you thought that the markets were going to continue to bounce and recover, nothing changed that assumption today. So it's like one of those days where we could have all went to Disney World and hung out for a while, come back and been like, well, I see the markets did nothing. Let's go do something fun again. So that's what you have here in the Dow, still very much beaten up in the short term. I use the analogy of a guy getting punched in the face by a professional boxer. It hurts. You're going to make it. It's all going to be okay. But in the short term, you're going to hurt. You're going to have a headache, replace some teeth. You get what I'm trying to say there. So that's what the Dow looked like. The Nasdaq wiggled around, of course, in a big range as well. Because of, look, yesterday, big recovery. People that were bullish took their chance to become and stay bullish yesterday. Today, there was really no need for them to do anything additional, whether it was be fearful and run away or continue to add to their positions. Just really no reason to do anything there. And then, of course, the S&P 500 just desperately trying to hang on to the 200-day moving average, as well as this long-term uptrend. And so everything there was a win. I look at it like that to say, there was nothing, right? So technical traders are going to look at this. I imagine, Bloomberg and CNBC, if they have technical traders that come on, they're going to say the same thing. It was a win. It wasn't a loss. It was just kind of neutral. So I haven't checked in with them, but I'm sure that they'll have or have mentioned something like that. So let's break it down here. IBM really kind of suffered after earnings there and lost 7.5%, 11 points. So a big sort of pullback there on the overall Dow. Thankfully, it's only 30 stocks. Most people don't pay too much attention to that. So if we go sector by sector here, I want to start with the semiconductors because they are trying to recover from that loss. Now, if you're a technical trader, you go, well, how far is it going to bounce? I mean, where should I look for this thing to stop bouncing? And for the moment, I'm going to draw this little line here. We're going to keep track of this over the next few days. Unfortunately, there's a bit of bad news here. So if we look at this downtrend line, that's all anyone has to go on. If you sort of project forward, you realize the 200-day moving average, that red skinny line, is going to have a big effect on the overall semiconductor sector going forward. I say that because if you remember back a few weeks, I said, we don't really care about the 200-day moving average. It's being disrespected at the moment, and I maintain that. But now we've started a new trend. We've started a new push to the downside, and so on the way back up, technical traders are going to look at that 200-day moving average as it now starts to turn over. But if you don't notice that, you've got the downtrend here too. Those two lines intersecting, to me, spell a bit of trouble. Like, it's going to take a lot of effort to get that thing back up there. I hope I'm wrong, but we'll see. If we move on here to the banking stocks, they did their part again, trying to rally here today, move the markets higher. The Fed came out with their minutes today. It wasn't anything we didn't already know. They just sort of clarified the minutes or the summary of the meeting they had last week, and it basically said, we're going to stay the course. We feel like we can raise rates slowly. They can raise rates slowly, and at this point they plan to do that. So banks starting to recover just a little bit. It's a similar picture there, by the way. I'll tell you what, for fun, let's draw it here. I like looking at charts. Let's draw the same downtrend line, a little steeper here for the bank stocks. Let's see if on the way back up, technical traders notice that or completely disregard that new downtrend there. So there you go. We'll put that on the screen and sort of extend it out over the days there. Banking, good stuff. I mean, lots of really good things to say there until we get back up to the 200-day moving average. Weakness, one of the things you're going to notice today, or maybe has already been highlighted for you, the price of oil. So the price of oil sold off 2.5% today, acting as another sort of weight to the overall market. That's about 2.5%. I said that 2.5% to the downside. Oil inventory numbers came in that there was more oil than we expected. I wrote it down somewhere. It was like 6.5 million barrels when everyone was expecting 2.2 million. So you thought there was going to be 2.2 million. The report comes out today and goes 6.5 million. That's a lot more inventory than we expected. Therefore, prices adjust a little bit to the downside. And so if you look at anything energy related, we'll just breeze over some of the exchange traded funds. But if you look at energy related stuff, down a little bit. Oil exploration companies down a little bit today. The oil ETF, of course, down as well. And so that's going to be part of the weakness. If you're broadly invested, you're going to notice a little hit in your energy portion of your portfolio. Tesla was in the news today, down 1.74%. Elon Musk has said, hey guys, next time you guys offer shares for employees and everybody to buy in the open window, I believe it's next month, he wants to buy $20 million worth of shares. You get what's happening there? So he had to pay the SEC $20 million. Tesla had to pay the SEC $20 million. Elon Musk is essentially telling Tesla, give me the shares. I'll take my long-term bet. I'll reinvest in you guys. I will take the shares in exchange. It's a really pretty win-win thing. It's a good media ploy, but it's also helpful for him if he can deliver as he's really promising. Also, what didn't really make the headlines was in China. They're working on building a plant in China so they can completely avoid the tariff war and all this nonsense. They're speeding that up. They want to make that happen faster. And so that just briefly came up as a couple little blurbs in the news today as I was looking. But I think that'll get more attention. I hope it gets more attention. So you got United Airlines up 6% today. Airlines altogether were higher. By the way, if you get a moment, follow us on Twitter and Instagram. We're really going to start pushing that a little bit more. On Twitter, I'm posting interesting things throughout the day. News events, statistics, things that happen when an analyst says he upgrades or downgrades a stock. I put this on Twitter earlier. The guy from Deutsche Bank upgraded United Airlines, Delta, and American Airlines. Lots of good things to say. The important thing is the guy that upgraded this stock. This guy is good. He's good at what he does. So he's from Deutsche Bank. Mike Linneman, Linneberg is his last name. Anyways, from Deutsche Bank. He's the guy that covers the airline stocks. He's got almost a 70% success rate when he makes a call and says a stock is going higher or lower. He's right almost 70% of the time, 69% to be exact, and he's right by an average of 24%. So not only does he get the call right, but he gets it right by a pretty significant amount, at least in the last 12 months. And so he's got a $100 price target on United Airlines. So we gave a quick post to that, see what you guys think. Nobody seems to care at the moment, but we're just getting started on Twitter. You know what I mean? We're just kind of playing the game, getting more people to pay attention. So a $100 price target from 88, that's a decent profit if it can get there. Any price target an analyst comes up with is going to be a 12-month price target, by the way, in case you did not know that. Teva, I put this one in here because I know some of you have been asking about Teva. It was down let's call it 5% today. Basically, Express Scripts, if you follow Express Scripts, they decided to go with a few other drugs from Eli Lilly and Pfizer, I believe. And sort of Teva missed out on the negotiating that was going on there. They got the raw end of the deal, and so the stock's taking about a 5% hit just today. I think that's going to get a little worse if you follow along. Okay, what else do we want to cover? Yeah, let's go back to the charts. So we got some of these pot stocks in the news. Of course, they're going to be in the news today. Tilray, Canopy Growth, all selling off on the official launch of legal pot in Canada. Keep in mind, look, there was a guy early this morning on CNBC. They interviewed the CEO, and I'm sitting there, I'm drinking a little coffee, having a good morning so far, and I'm watching the guy. They interview him, they ask him a bunch of questions, and then they did the right thing at the end of the interview. If you get a chance to watch it, check it out. They did the right thing by saying, hey, not to put you down, sir. He was the CEO they interviewed. Not to put you down and not to put your efforts down, but our viewers need to know that $13 billion in valuation for this company is absurd. And so they kind of push that point. Good for them. They usually just cheer people on, and it gets really frustrating. So that was a big one. You could tell the CEO wasn't too cool about that, but they let people know, look, $13 billion. This company is nowhere near $13 billion. Even if they, if this goes great and they just sell more than any other company out there, the CEO just had lots of sort of cheerleader things to say. And I thought it was funny how they said, we're global. We're all over the world, and we're positioned to poised to be successful. Well, I could say I'm all over the world too. It doesn't mean you have revenue coming in or any decent amount of sales to support that. Sure, Jazz Wealth is global. There you go. I mean, I said it. It doesn't make a difference to the bottom line at the moment, so that's what I'm trying to get at. Even if they do 100%, if we find out that they grew 100% the next quarter and the quarter after that, that's not even $100 million in sales, and they're worth $13 billion. I don't think so. I don't think so. I hope I can change my tune on that one, but you get where I'm going. Winnebago, they're going to be in the news today. They reported earnings, beat on earnings. They said people are RVing everywhere. They're watching interest rates carefully. They had higher revenue. Get this. Here we go. I've been saying this every day now before earnings season started. The company had higher revenue on tighter margins. So costs are starting to become an issue for them. However, people are still buying, and so they have more revenue coming in. They're making less on it, but they're making it up for it in the dollars there. So the stock was rightfully so, up 4.5% today. Analysts will continue to focus on revenue, and that's it, this earnings season. If you want to look at earnings companies and try to play them and figure it all out, revenue is where you're going to look this earnings season. That's all that matters. I told you beforehand. General Electric, I guess they got a $15 billion power contract in Iraq. Very interesting story, by the way, if you pay attention to this one. I think Germany or Saudi Arabia, I can't remember who it was. Somebody else was supposed to get the contract. White House steps in and they're like, hey, Iraq, remember everything we did for you? We're going to ask you to go ahead and just give General Electric this contract. And it appears it worked. So friends in high places, right? Home Depot, retailers were down today, right? So Home Depot was lower by 4.5%, Lowe's down 3.5%. They've all been selling off here little by little. Was downgraded by Credit Suisse. They cited valuation issues. So in the short term, maybe it's a little overextended. In the long term, analysts are thinking, downside. Because of that, if you happen to look, sort my list. If you happen to look at retailers across the board, Kohl's lost 3.5%. Macy's lost 5%. Advanced Auto Parts 5%. AutoZone was the bigger one, 7%. O'Reilly, all of those guys in the same category. Nordstrom, Lowe's we mentioned already. You get what I'm saying. So all of those retailers were sort of at the top of the list as the big losers. You can look at maybe just an ETF to kind of track what's going on there. In the short term, they've all just sold off a little bit. United States Steel Company. So you have after hours here. We'll check in a second. United States Steel, Steel Dynamics and Alcoa reporting earnings. I know Alcoa reported already. They seem to be higher after hours. But United States Steel got into the mix and said, hey, we're going to give our workers a 14% raise. So if you've worked for them, you're going to get a 14% raise, biggest raise they've had in 5 or 6 years, I believe. And it's because the union won, by the way. There was a big fight, like they wanted to make more. So United States Steel got to come out and say, okay, we'll give you a raise and make it seem like they did it. But basically the union kicked their butts on that one. So everybody's getting a raise. The stock was still a little bit higher. Alcoa, let me see, was it higher? See if I can find any kind of news. Up after earnings, was initially down, I believe. Looks like Constellation Brands, while I'm looking here, just in real time, Constellation Brands CEO stepping down. No problem. Stock down a little bit. Not too bad on that one. That might get a little bit worse there. I think the news is still just coming out on that one. Don't see... I'm going to just stop looking here for the moment. Nothing on Alcoa or anything just yet that I can report. Both of those have earnings going forward there. So, look, we're in the thick of earnings season. It's only going to get thicker. So far, 90% of the companies that have reported have beat. However, they're focused on earnings. Analysts are focused on revenue. So that statistic, we'll point it out when I can. 90% of companies have beat expectations so far. Very few companies have reported in the S&P. We haven't hit that peak week. I think it's next week where it's just one after another. They come at you left and right. Maybe the next 2 weeks now, given the way it started. So revenue continues to be the focus there. Market was all over the place today, and nothing changed. Yeah, you guys both perfectly. Cool. Will it make the shares go up? No, it won't affect the shares at all. So if you're thinking, hey, can I beat Musk to the old purchase there? No. 20 million bucks. You notice how Elon Musk hasn't tweeted much either. The other day, well, I mean, as much as he has. The other day he sort of tweeted just to jab back at one of those comments about who's going to be the chairman. Very muted. Very much seems to have learned his lesson for now, or at least while everybody's watching. Maybe once it dies down, he'll get back to it. Yeah, and I hope he does get to crank out these cars. Cool. DHR, is that what you did there? You added that to your watch list. Nice dividend. You can reinvest for more shares. Well, look, there's one way to look at this one, in my opinion, for a long-term sort of play, and that is look at you. First of all, you're going to have to realize it's pretty volatile, so you're going to see some decent ups and downs along the way. But yeah, I get your dividend play there. I also get it's held in. It's pretty much held tight here and hasn't really collapsed like the banks or some of these other areas where we had really strong sell-off, tech, semiconductors, and things like that. So I can't say, it's the right one there. Oh, actually, you're talking about DRH. Maybe you should look at DHR. Yeah, this one's, I mean, you're trying to buy at a discount there, so I get what you're doing. Is there any way you could play as a whole rather than try to pick the stock, just one stock on that one? If you looked at any ETFs in this sector, they're pretty competitive, so I might sort of lean that way. China coming to the table anytime soon. All my Chinese stocks are half price. No, these things take years. So all this daily trade war news or trade skirmish or whatever they call it, this doesn't happen overnight. It's not going to be all of a sudden that China says, we worked a deal with the U.S. and it's over. The whole Canada, Mexico, U.S. thing, that's completely separate. That's not a trade war. That was a completely separate deal. The China negotiations going back and forth, that's going to continue. And notice how the government's already moving on to France and the UK and Germany maybe. They're just pretending like, okay, you don't want to deal with us, we're going to go do other things. They also canceled or backing out of their postal deal, the postal treaty. If you get a chance to read about that, that didn't really pop up in the headlines today. But if there was nothing else to talk about and we were going through, or maybe closer to midterms, that would have been a big deal. So today we backed out of that. It takes a year. Now, granted, we don't just walk away. It takes a year. We could still negotiate on prices. However, we made that official announcement to say, we're backing out of your postal deal where we're going to give you those subsidies to ship things, small packages to the U.S. So just another sort of jab at China without making a big deal about it. You could see their sort of approach to them is changing. So years. It's not going to be an overnight thing. Yeah. Online bet, yeah, high interest savings accounts, 2%, you got it. I wouldn't, if you're focused on that sort of thing right now, I tell people, your emergency savings and things, you now have an opportunity to move it out of your savings account into high interest savings accounts. You got to check that out. I would not go for the CD. There's not enough of a difference there to say, like years past, to say where a CD made more sense to lock up your money. Don't lock up your money if you don't have to lock it up, all for such a small amount. Do the math on that one and see, is it worth it? I don't think so. Personal opinion. Do what you like. Hey, do me a favor. So we're going to make a big push to the end of the year to get subscribers on YouTube. It matters not to me. It doesn't change a thing. We make a penny on this thing to make these videos. We're not here making videos to try to make money off of videos. But if you hit the subscribe button, it's the data. I'll be perfectly honest with you. We want the data. I'm going to do a lot of discussions next year in conferences, and I want to be able to use the data of how people in age groups view financial advice, financial tips, the real geeky stuff. And I want to sort of make the pitch to the bigger companies that it's education. Solve the education side of it, give the education away, help them out, and customers and people that are considering using you guys will be more engaged, right? And an engaged customer is always a better customer. The industry for years has gone into this pitch where they just try to leave you out of all the gobbledygook. They use big words, they use big terms with the mutual funds and everything, so that you just give them money and say, here, you manage it, right? Our customers don't say, Dustin, you do it. I manage it. Of course we manage your money, but I want to teach you along the way. And so if you'll hit subscribe, we'll have more data to use so that when I give these talks, hopefully I can broadcast them when we do them. That we'll be able to use actual numbers and not have, they'll be decent sized numbers. So if you would do me a favor, hit the subscribe button. If you like to know when we go live, turn the bell on. If you don't care and you're just trying to help us out for the talks that we're going to do, don't turn the bell on. We won't bug you, I promise. There's no other ulterior motive, I swear. It's just for the data. I want your data. So unlike Facebook, I'm willing to tell you that. Cassandra, 34 years old, how much to reach $1 million by retirement? That's an easy calculation to do. You could probably use any online calculation for that. I'm not really into that. So Cassandra, I want to know, how much do you need to invest to hit an income goal? $1 million may not mean much depending on how long, you're 34. $1 million may not mean much 30, 35 years from now. So I want you to know how much an income in the future you're going to need every single year to retire. That's what we do for our customers. When they open their account, when they get it funded, we start investing, get all the questions out of the way, and then we go, okay, now let's work on your plan. You know those videos I do where we say if you're 34, you want to retire at 67, Social Security, and all this great stuff, here's how much you need to invest. That's what we do for our customers, because that number can be tweaked. If inflation gets out of control, if your life changes, things happen, we can tweak that number, and that's what I want to focus on. So don't look at your retirement as, I need a magic number because it sounds cool. Look at the number that you need for your life and the way things might change, which means a little homework. So you have to think that one through just a little bit. So that's how I look at that one. Anyways, gonna wrap it up there. Thank you so much for watching. Thank you for hitting the subscribe button. If you do, we'll be back tomorrow on the Doe Show. We're gonna continue our active trading week. We're gonna be talking about statistics. I'm gonna get the glasses ready. I'm gonna get pretty geeky on you tomorrow. It may not be for everybody. I'll be honest with you. If you're not one of those that, if you trade actively but you don't really pay attention, you're not going to like what we do tomorrow. So we'll see you tomorrow at 1 o'clock, and then of course closing beat at 5 o'clock. Have a great day. Talk to you tomorrow.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.